What's up? What's up? What's up, everyone? Hope you're having a blessed day. Thank you for taking the time out of your day to watch this video. Today, I'm going to be going over Bitcoin and the analysis that really told itself yesterday. It was really telling a story, especially on the 4-hour time frame. And I'm really just going to break it down. We're going to break this video actually into two halves. The first half is I'm going to show you my analysis, like everything I have on my screen, really what it is that I was looking for. And then I'm going to break everything down from scratch. So I'm going to go from a blank chart and really tell you specifically how I got what it is that I'm doing for. So without further ado, thank you again, and let's get into it. So from the 4-hour perspective, the main thing I guys want you to pay attention to is these wave sequences that I have on, right? The wave sequence really starts from the, whichever way you want to look at it, but the cross of the 50 moving average, which is this white line right here, is telling the story, especially on the higher time frames going into the lower time frames. It's really important to use all of your time frames together to really piece in the story. And then as well, these blue zones I have are the market structure. So I'm gonna just try and show you and then break it down later. Specifically, when you come down to the hourly time frame, what I guys want you to see is how price was riding this moving average, right? Price was riding this moving average, is riding whole levels and fibs levels as well. But specifically, when you have this big bearish impulse that broke not only the market structure that price was having around here, it it had resistance along this moving average, and it gave you some more bearish impulses down. So specifically, I'm going to explain why I chose this 57.125 area to get go. If you were to go to the 4-hour time frame and utilize the fib from this high to the low, this yellow line right here, if you follow it all the way to the right side, is really where price made its final decision. This 4-hour counter right here. This 4-hour counter right here was the last bullish candle that closed above the 50 moving average before price finally made its tanking to the downside. And as I go to the hourly time frame, you really can see that price was just really trying so hard to break above 50%, but at the end of the day, it couldn't. Right. And specifically why the 57.125 is because this is my last 382 fib that you see marked right here. Price finally broke down to the downside. So pay attention to this red wave sequence right here, right? You have really, what I like to first say is the wave sequence. How I like to look at it is if you pay attention to the 1, 2, and 3. Once you have the 1, 2, and 3 wave sequence, then you can really be identifying where you would like to enter into the market. So after I identify my third wave sequence, I like to really enter into the market going down lower. But actually, sometimes price may even give you another retrace. It's not always likely into a fifth wave, lining up with the third wave to take it to the downside. And that's exactly what happened. And specifically around this 57.125, once again, this 382 fib. And the fib I'm paying attention to now is from this high to this low, retraced back up, right around this 382 level. You can see price really failed to the downside, and the buyers just could not hold in anymore. If you pay attention, right, the buyers were actually more in control with this bullish impulse, right? It retraced a little bit. Sellers kind of was fighting back, but the buyers were really in control up into here. And what I mean by here is this specific area right here, right? Once price got above here, the buyers just died. The buyers died right here. Buyers came back one more time, and then it failed. Price never even closed above the actual previous high. So this is giving you a higher low at the end of the day. So once price failed above here, right, I'm paying attention to all my fib levels. These are the levels I like to use as my zones, right? People like to use whole levels, quarter levels, whatever zone you like to use, but I actually like to use my Fibonacci levels for my zone. And this 382 is the last zone level that really told me what was going on. And if I were to draw a box from my 382 to my 236, right in here, I'm gonna mark this box yellow so you can see exactly what I'm talking about, is where I was really liking to enter into the market. I actually entered into the market right here, the 382, because I saw what was going on. I saw the wave sequence, and after the wave sequence, I was really determined on this was going to continue to the bearish downside. Especially, I was respecting the 50 moving average as resistance. But really, this last 382 to 236 zone really gave you the answers to the test. And really, especially with this red candle right here with the white emblem, and now this red arrow is pointing at this candle. This candle is the candle that broke the structure that price made from right here, from these lows these lows, and then continue down to breaking more structure as it continues down. So this zone, specifically around the 57,125, is the last support zone, in my opinion, before you even consider this one, before it really continued down to the downside. And me, for my targets, I like to enter in the fib zone specifically, and then take it down to my extension fib zone. So I specifically took the price down from the 38.2, which is 57,125, all the way down to the 53,000 whole level, which was around my negative 414 extension. So that's kind of an overview of everything that I was looking at. I'm not really trying to break down too much in the first half, because I just want you guys to see the wave sequences that really happen. Once again, from a higher time frame perspective, after I have confirmations for my 1, 2, third waves, then I can really be looking to enter into the market. But I like to use the wave sequences lined up with my 50 moving average as well as my Fibonacci. I like to have as much confluence as possible. And really right here, you see, if I'm going to be specific, this was the high of the third wave, right? As you see, pay attention to this red candle. It gave you nice big bearish. Just what big bearish broke all of the previous momentum that was built up, and then buyers came right back in. So this is Bitcoin. There's a lot of buyers in Bitcoin. They're not going to let this thing just fall. But if you pay attention to these candles, right, pay attention to how the candles are happening. Is this price action? I could go in depth into price action, but I'm really trying to tell a story right here. These two candles right here, I'm actually high my chart for a little bit. These two candles right here really, really, really told you what was up. If you can pay attention to these two candles, really, 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 if you understand price action, you can say, okay, this is one thing, but really as it gave you a bearish impulse, retracement, and then continuation, it was too beautiful. The story is there. So without further ado, that's just kind of an overview of how I was really looking at the market. Now I'm going to kind of go over, start from blank so you can really, really understand once again how I was able to identify the sell. And even actually as I'm on a blank chart, if you go down to the lower time frame and if you understand price action and really using time confluence all in together, you can see that there was really a fight, right? One last time, the buyers came in, nice bullish, right? This is some nice bullish action, especially after the bears came right back in, right? Nice bearish action, and then these buys. These buys were important, this support level, especially after, if you know about smart money concepts, right? Price came in and filled in this IPA. Price came back up and filled above the 50 moving average. This is extremely important for the buyers, right? Especially as it gave you this one last dip, right? Another higher low followed by another engulfing candle. And this is extremely important for the buyers. But really where it gets important is after price breaks above this high right here, right? This last bullish candle before the downside was the last bullish candle that really opened and closed above the previous high, giving you a higher high, but that was it. After that, that was it. And especially if you know about your extension fibs, right? I'm going to draw on my higher fib extension zones. If you pay attention to this 113, if any of you know about really how to use Fibonacci's, you know that the 113 is really a nice high reversal key area. This price right here also had another entry right here, sniper entry. If you know what to look for, price just tanked to the downside. So I'm gonna kind of explain really from scratch, really on how to identify what it is I like to look for. Me, I usually like to stay from the daily time frame when I'm starting from scratch, but Bitcoin was moving a little bit different, especially if you're analyzing with me on my Ethereum setup, right? If you pay attention to Ethereum, right, you can see that price came back and it retraced at least to the 50 moving average before it moved back up. Bitcoin was on a little bit of a different of a wave. It never even came back fully. But if you go down to the 4-hour time frame, right, 4-hour time frame is really going to tell you the story that really needs to be read. So if you take a fib, right, from this high to this low, okay, and stick with me, family, just stick with me. All right, if you take a fib from the high to the low, I'm going to actually mark this middle zone yellow so there's no confusion. All right, from the high to the low, pay attention to how I draw these wave sequences, right? I'm going to draw a wave sequence. And you want to start your wave sequence really from the last touch of the moving average that's going to continue back into the moving average. What I mean by that, I'm starting my impulse, the zero leg, from down here where it broke out into the high. Now I'm starting my wave sequence to the 1 to 2, and all the 1 to 2 is really I'm identifying is the bearish impulse that I want to catch, right? I missed it. I'm actually don't have FOMO because I need confirmations to tell me what's going to happen before it gets in. So you have the 1 to 2 wave sequence, then you have your third wave sequence. After, remember what I said, you have your 1, 2, 3. I can be looking to enter into the market, but you don't just automatically hop into a trade as soon as you identify that third wave sequence, because you need more confirmations on top of that. So really for me, the confirmation I had was really when price broke the moving average. And once price breaks the moving average, in my opinion, that's when you have left the third wave and you're now entering into the fourth wave zone. But price wasn't done. The buyers are not going to give up. So you have your end of your fourth wave, or the start, depending on how you look at it, right, into the fifth wave. Now, what's important about the fifth wave is that the fifth wave is not always guaranteed to give you another opportunity, but this fifth wave was so beautifully aligned. It just happened so in accordance. So once again, I identified my 1 to 2, and my 1 to 2 is my wave sequence. I mean, my bearish impulse that I identified that I really need to I don't want to say copy, but replicate that same move. So if I were to measure this impulsive move right here from high to low, and then take it from my third wave sequence, you could see that this bearish impulse was almost identical. It was around 1,000 pips off. Nonetheless, it's still exactly the same. So I'm gonna continue on for the sake of my time. You have to identify your high to low fib. And once again, if you pay attention right here before the sell-off, look at how price is following along with this 50% fib. Especially if I were to go down to the lower time frames, price tells a story. And I'm actually going to go down and stay on the 1 hour now, because this is where I really was sold on the bears being intact, right? I'm going to draw on my second Fibonacci now. I'm going to take it from the high to the low. Yes, I use the wicks. Wick lives matter. I will say it again. Wick lives matter. Wicks are so important. They tell you what's up. And then I draw my second fib. This second fib is really what's going to help me identify my next wave sequence. So I'm going to again start from the last correction into the move that I'm looking for. My 1 to 2 is always the identified move that has already happened. And all I'm doing now is piecing in the story that's telling me what is going on. If you identify really what the wave sequences are, you really have everything else you need. If you have some more confirmations that some people use the stochastic and RSI, the 50 moving average, whatever helps you just be able to identify market structure in with price action. Now, price action and market structure is huge. For me, market structure is simply just your highs and lows. I'm going to mark this low right here. And then I'm also going to mark this high that happened right here. If you pay attention to price failing to close above these highs, right? Someone's calling me. 1 second. My apologies. If you pay attention, right? Pay attention how price is failing to close above these highs, and then followed by this nice bearish impulsive move. This nice bearish impulsive move gave you a retracement. Here are my wave sequences. Remember, your 1 and 2 is an identified move that you needed to identify. Notice the keyword I keep saying. Identify. Identify this wave bearish move here, followed by the correction. And with the correction, notice how these bulls, this is nice. This is a nice, really nice, strong bullish pullback. And a lot of people were trying to buy off this previous market structure support zone into here. Actually, one of my great educators, Picasso, called a nice buy in this zone. It was actually, in my opinion, a nice buy. But remember, adaptation is huge. You never want to marry a trade as a trader. You always want to adapt to what price is telling you, because it's telling you a story. So this was a nice supply zone to buy out of. But what you want to pay attention to are the price action. Market structure is king, price action is queen. They are co and co-hand. You need them to work together. And this candle that I'm pointing at right here, this candle right here, this is the first candle that opened and closed above the moving average, immediately got it engulfed and rejected to the downside. So then you have bullish price action one more time, tries to get in, but it fails to the downside. So price action, the queen, is telling you what's up. Lined in with the market structure of this previous high, once again, price failed to close above. So it's making higher lows, even though price excuse me, rated the high, right? The price actually came above the high if you pay attention to the closures of your candles. The closures are important because that's what's going to tell you how market structure is respecting it, right? Price is coming above, but it's failing to close above, failing to close above, failed to close above here. It kind of did right here, but got immediately rejected to the downside. And then right here as well, price just could not do it. So price action and market structure is king and queen to really telling you and identifying, analyze what's really going on. So this is what the 1 hour price action, and like I said, once you have identified your 1 to 2 wave, your third or fourth wave sequence is really where you want to look to enter into the market. So me personally, this counter right here that closed above the moving average is all I needed to enter into the market. I could have entered in here and put my stop loss above the high. So let's say if I did that, right? Let's say if I entered in right here, put my stop loss above the high, my stop would have got rated and I would have got stopped at the trade, but I would have immediately entered in again off of this candle, right? And this is just that I'm using the price action analysis strategy. Same concept, right? My high is above, my stop loss is above the high, and I can use my target, which is again for me is my extension zones, and take it down to here. This is at least a 1 to 5 ratio. That's good in my opinion. But I want to look at it from a different analysis, right? This is from a 1 hour and even a 15-minute if you want to go down there. Me, I'm looking at this from a higher time frame perspective. The 4 hour is really telling me what's up. I'm going to actually delete this wave sequence because I don't want too much to be on the screen. I'm going to delete this fib as well. And I just want you guys to pay attention to the higher time frame, what's going on. This candle right here, ladies and gentlemen, this candle right here was the first continuation for the bearish downside that closed beneath the moving average, is giving you a heads up as what's happening. Remember, we use time frame confluence. That same 4 hour candle is now the 1 hour candle that closed below. Me, perfect. That's all I need. So now I'm looking to enter in once again from that same level that I said earlier, the 1,000 level, 57,100 level, excuse me, is where I was really trying to enter into the market from the 382 from an earlier fib. So I have my stop above here, and the higher time frame fibs for me, my real target from the 4 hour perspective was all the way down here around 52,000. But price actually made it to the previous low, and if you would again want to pay attention to your lower fibs, right, your extension zones were hit. And for me, my extension zones from a lower time frame perspective, my lower targets, the first target for me was around 54,000. The price actually made it all the way down to 52, almost 52.5. Nonetheless, the extension zones were hit, your targets were hit. So you want to identify and give what the market, take what the market gives you. This is a give or take world. You have to take what it gives you. And once again, I really want to point out the price action right here, right? The price action lined up with the market structure. This is bears taking over the bulls. The price action, these candles right here, this is not good. From the buyer's perspective, these two candles were not good, especially followed by this red candle right here. Just bears are taking over. And then this candle right here was the last candle that violated this price action into this blue zone right here with the market structure of this low, was fully violated by this candle. This was my full confirmation candle. Some people like to enter in a little bit lower after you have the full violation, but your risk is going to be a lot higher. Me, I like my other confirmations that allowed me to even get in up here to have a much better risk to reward. So it's really about how you like to analyze and identify the market. But this is my way on how I like to do it. I want to thank you all once again for being able to stop by and watch this video and how I really interpret and go about going to markets. This was a beautiful sale. The story told itself from time and time again. I'm actually delete everything again. If you look at this from a blank chart, even from the 1 hour perspective, this is key. This is so pivotal and so key. All I got to do, right, is mark this low, mark this high. If you like to box up price, I can see the high and low. Once it's violated and take it down to the downside, price just continues to respect the trend. Trend is always your friend. The buyers were almost here. The buy was almost here, but you have to respect what price is telling you. And that's how you have this nice following to the downside. Beautiful, beautiful, beautiful. As in terms of what's happening next, in my opinion, with Bitcoin, overall, I'm bullish. Look at this. I'm bullish all day, but from a lower time frame perspective, as price tells me what it's doing, I have to adapt to what it's doing. So right now, from a 4 hour and 1 hour perspective, we are bearish. We are beneath the moving average. So right now, what I would do for my next move, I would draw on a fib. Same thing, over and over and over again. I would draw me a fib on, and I would wait till it